Okay, guys, welcome to the second and the final sessions for the knowledge sharing batch. Uh, Now we did learn about moving averages and what is the support, what is resistance, how to use it, how to find the supply zone, how to find the demand zone, what are the candlestick, what are the candlestick patterns you need to look for, where to look for. We also talked about the time frame, like 5 minutes is ideal, 5 minutes and the 15 minutes is ideal for the uh, day trading. If you wanna go find the resistance, you look for 1 hour and the 4 hour resistance, like a time frame. If you're doing the day trading, look for the daily or the weekly time frame. Anybody has any questions on concerns so far? I hope everybody did some practicing back home when they went after the last session and they found it useful. Please ask me your questions if you have any.
Hey, good morning, Jigar.
Yeah,
I have a question.
yeah.
I had to leave in between last session, but I went through all the recordings.
Yeah.
My question is, I know that you went through the daily, the moving average and moving average exponential, but I didn't see where you explained what
Okay.
is moving average and what is
Okay. Okay. So I will repeat, like I did kind of touch base, like in moving average, like is nothing but like averaging of particular time period, right? Say for an example, if I have like say 1 plus 2 plus 3, so the total will be like 6 divided by 3, because this is like a 1, 2 and 3 period. So this will be like answer will be like 2, right? That will be the simple moving average. Okay. So usually the simple moving average is will give the average for the entire period. Okay, it will not give the weightage to the particular price. It will give the same weightage to all the price. That's why you have this one. But whereas this exponential moving average is, you will be given more weightage to the recent price than the previous price. So for an example, when they do the calculations, they will give more weightage to the number 3 and number 2 than number 1. Okay.
Okay.
So exponential moving is very fast. Okay, so let's see how it, what's the like how you can see on the chart on the different. Okay, let's see. This is like before I go, this is the Billy which I did discuss on the my video, and it was at 110 and it came to $100, which we like kind of decided that it's gonna come. So our prediction was like a bang on. So here I'm gonna like put everything off here. Okay, so nothing on the chart. Okay, now I have the moving averages here. Okay, this is BB, this is moving average. So now let's see, I'm gonna put 20 moving average here. Okay, 20 moving average, and I'm gonna keep this one as a 20 moving average. Okay, this is the EMA, this is MA. Okay, I'm gonna take this off, I don't want anything, and this one, and I'm gonna make it as a red. So red, which you are seeing, is a simple moving average, and the green is EMA. Okay, let's upload. So do you see some difference here? Okay, let me just put it on a daily time frame so you will be able to plot it more. Do you see much little bit difference here?
Yeah.
Right. So usually green is a like here is the green is a EMA. So EMA is a fast reactive, whereas the SMA, say for an example, for this one, when the price was moving up, do you see that EMA was going closer? Like the green EMA was closer to the price, whereas the SMA was laking. Okay, SMA was laking. Even when the price started falling here, EMA was with the price and the SMA came late with the price. Right? So even here, when the price started like move a little bit up, So what does SMA does is it gives the equal weightage for, like, say for an example, this time period, it will give the equal weightage. It won't give like any discrimination with the prices. Whereas the EMA, we will do like more of a weightage over here than here. It's the calculations. If you go on the like a Google check how they calculate, is the calculation, but the you don't need to go like a how what they calculate. But usually, if you know that EMA is like a fast reacting, it will give more about momentum when you have the smaller EMA. So for an example now, let me put it on like here 5 EMA. Okay, let it make this one as a, this one is a 5, and this is as a 5, and this one I'm gonna make 20, and this one I'm gonna make 20 as well. So let's see, this one is black I'm gonna keep, and this one I'm gonna keep purple. Okay, so green and a purple. Okay, let me green and a red, so make it easier for you. Green and a red, and this one is purple and a black. Okay, so if you see here, green is a 5 EMA, right? Green is a 5 EMA, whereas purple we put it as a 5 SMA. Okay, so now when the price went up, you most of the time this green EMA is closer to the price. Okay, is always closer to the price. Even the price when the price fell here, if you see here, when the price fell, EMA was the one going along with the price, and when the price went up, EMA, the green one, was up, whereas the purple one, which is the simple moving average, was a little bit lagging behind. Right? So if you go to the 5-minute chart, right, sometime this green will give you better like idea that price is moving or the momentum is coming. Say for an example, this one here, this is the green and this is the purple. Green is the EMA. So the green started moving up before even the price went up. Let me just cut off the moving here. See here, green went first, and then the simple moving average moved, right? Whereas the second one is like a 20 moving average, I think. Yeah, this is 20 and 20. 20 is our red, EMA is our red, and the black is the simple moving average. Okay, so now if you see here, when the price started falling, right, the price started falling, the red reacted faster here at this area. If you see here, red reacted faster, which is EMA, whereas the black, which is the simple moving average, acted late. It gave the signal late. Why? Because the EMA gives more preference to the like last prices than the like all the prices together. Okay, does it give the answers to your questions or no?
Yes, it's clear for me, Jigar.
Okay,
Thank you.
yeah. Okay, thanks. So if you are doing a like a day trading, EMA is better. Okay, the smaller moving average is very better. But if you are doing the swing trading and other thing, SMA is better. Okay.
Yeah.
Okay.
Thank you.
Now let's see. Anybody has any questions so far?
Jigar bhai, one question. So if somebody is using like a longer term horizon, so what should be the ideal EMA and SMA?
200, 50, 50, 200. So always remember, for a smaller time frame, 5 is better, 10, 20 EMA. Okay, for the SMA, 20, 50, 100, 200, and worst case scenario 400 SMA. Okay, that's for the longer time frame, longer swing trader. Okay, trader. Okay, so I'm gonna turn this off. EMA is off. Okay, so if you want to use for the smaller time frame, use 5, 10, and 20 EMA. Sometimes people use 21 EMA, 9 EMA. It's not gonna make much difference, but these are the like moti kind of close to the EMA, which you can use for the smaller time frame. For the longer time frame, when you want to find the support for or the resistance, SMA is better. Say for an example, if I want to put the chart again for the Billy, okay, and I'm gonna put it on a daily. Okay, now I'm gonna close the EMA and put the inputs for the SMA is like 20, 50, 100, and 200. Okay, so I have 1, 2, 3, 4. So let me put it down here. One is green, then red, then put the purple, and the black is the last one. Okay, okay. Now if you see here, do you see some differences? Usually like price reacted here on a 20 moving average and then is bounced back, couldn't sustain the 20 EMA, then they took support from the 50, then found the resistance at 20, came back again, 50 didn't support, end up on 100, went it again, 20 kind of came closer, kind of faced the resistance, couldn't feel, came back again, and here again is below the 20 SMA, below the 100 SMA. So now the 80 is coming for Billy. For an example, before it 80 comes, I would say this one 88 will come, like 90 will come, 88 will come, and the probably this moving average will gonna come closer, so it would end up around 86, 87. Okay, does it make sense here or no? How does this SMA kind of helping you out to figure it out? And
Yeah, it does.
yeah, you go on the weekly like a time frame as well, like a, weekly, which is bigger time frame, and on the weekly time frame you can see that Billy is making downward movements. For an example, do you remember the one which pattern which we kind of discussed last time was kind of just so it we didn't discuss much, but like price went up, takes up, and then it breaks down. It will take a while. It will 1, 2, 3, 4, 5, 6, 7 weeks. It's been doing this one. So price gonna probably eventually come down to like $80 or $90 level for the Billy, for an example. Because if you see here, every time is going up, is facing a resistance here. It took the support here on a weekly basis. It's a bigger time frame. Bigger time frame has a more like a realistic picture than the smaller time frame. It took the support, it broke the support, and now it's facing the resistance at the same level, right? And now if you see the 20 weeks average, so 20-week average, that means almost 5 months. Okay, so it's going like below the 5 months average for the price, and this is SMA, right? If we check the EMA for that same, let me put this one as blue, and I'm gonna put the 20 for here. Okay, I'm gonna do this one, right? The if you see this blue line, which is the 20 EMA, is also kind of flattering, and the price also came below the 20 EMA, right? If you see, like, this is the green is 20 SMA, right? Whereas the blue is a 20 EMA, right? So now because price always give the more preference, like weightage, EMA gives more weightage to here, not the overall price. That's why the EMA came into the pictures little late, because this was the high price, this is the wrong price, like the low price. So that's why on the longer time frame, SMA is better, because it will give like a proper idea, like, okay, what was the average for the last 6 months. But EMA will give the idea, okay, for the last 6 months, it will give more preference to the last 2 months or the 3 months, but it will not give the idea for this one. So like 20 SMA is like 1, 2, 3, 4, 5, 6, 7, 8. 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, and 20. So up to here. Okay. So this is the average price for this level. So whereas SMA is done, gives the, both are calculating the same, but the EMA will give the more preference to this portion more than this one, and the list to this portion. Okay, so that's how you need to understand like which one works better for you. Some people just use the EMA, some people just use the SMA. It up to you what kind of use, but usually for me, I usually preference give I give my preference to the SMA on the longer time frame. If you are doing like a smaller trade for like a one day or 2 days, you can go for the EMA with the like a 1 hour or the 15 minutes chart or the half an hour chart. Okay, does that make a sense?
Yep, that helps.
Okay,
Thanks.
yeah. Anybody's any questions so far? Please ask the question. If you don't ask, okay, it will be very hard for you to understand. Mhm. Any question? Hello, anybody, any question? No. Okay, so let's move on. So now let's move on to the Bollinger Band and how we can use the Bollinger Band. What's that? Yeah, because now we're gonna use the like three indicators. One is the Bollinger Band, another one is CPR, and the next one is golden crossover, and five like a opening breakout. I think that was the plan. So now let's look for the day charting. Okay. Okay, I'm gonna move this one off. So let's go to Bollinger Band. Okay, so when you go to the your indicators, you will find this Bollinger Band. Click on the Bollinger Band and it will come like this. Okay, it will come like this. Now upper part you can say is upper band. Okay, upper part is upper band, lower part is the lower band, medial line you are seeing is a 20 moving average. Okay, is a 20 moving average, simple moving average. You can change the color by going into the what you call the setting. It will be very easy for you to go and change it if you want to. You can change any color, but I just kind of keep this one. So now join with computer radio. No. Okay, so if you have any question, please ask it. Otherwise, keep yourself mute, please. So now, can anybody find some pattern here that the how the price went on the Bollinger Band? Anybody wanna take a guess?
Yeah, it's going to the resistance and then coming back and
Coming back here, and it probably take sometimes supports and fells, and then again going up. Okay,
right. Yeah.
right. So usually, the thing which you need to look for it is narrowing of the band. What is the narrowing of the band? So this area, if you see this area, do you find this area is kind of more narrower than the previous part?
Yeah.
This is the 5 minute chart. Okay, this is the 5 minute chart. This is for the day trading. Okay, how you can use it. So whenever you see this kind of narrowing of the part, you will see either the band will open up downwards or the upwards. Okay, remember, either it will open upwards or the downwards. It was called the Bollinger Band blast, or you can say is a Bollinger Band walk. Okay, if this kind of scenario comes, and once the price going up, and as long as it's walking with the BB, which is called Bolinger Band, you can be with the trade. Okay. Scenario which I'm gonna show you, and it might help you out on the Tesla, because I did observe those one for the just for the 5-minute chart. Okay. 5-minute chart.
So this is actually the $1 million question that, okay, these are all lifetime and live charts. So
Yeah.
now, as you said, so it will either go down or it will go up.
Yeah.
So how can we kind of predict in advance and
Yeah.
act accordingly?
Okay. So for that one, you need to see what was the support and the resistance previously. So like if you see this Tesla chart, see here, Tesla was going sideways, right? The band was narrowing at the time. So now I'm gonna close this one. Okay, I'm gonna close the BB off for a while. So now you can see this. So I can put the resistance here. Okay, and this is the support here, right? Can I do these things?
Yeah.
Yeah, right. Basic. I'm not like using like fancy, right? This is like a support. This is the resistance on a time frame, right? Now when I put the BB for the next day, because now when you see it break the support here, it was a support, it broke the support and now is walking downwards, right? It's not going upwards because this was the resistance, so there are chances of it to go upward is very less, right? Does it make sense to you, Thirenbhai?
Yeah, actually, it makes sense. But you see, if you see previous three up and down,
Yeah.
so those M shape,
Yeah.
so there was a possibility that again it's going up.
Which one?
That just
Here?
like the two previous,
Here?
right? Yeah.
Here? No, because here is the resistance. See, we already draw the resistance. When the price went up, if you remember, when we said that when you have this kind of scenario,
Okay.
that you have the hammer, the next candle has to be on the up,
Yeah, right.
above the high. But now the next candle closed below. And now
Okay.
once you see this is closed below, now you have to wait for this confirmation that when the price closes below this support or the resistance level,
Yeah,
then you
right,
go
right.
long or the short,
True.
right? So,
Yeah, that's right.
so whatever we learned is not like we are not undoing it. It has to be like here at the time, right? So now, if you see here, the price went up, and when we do the golden crossover, it will help you a lot. Okay, when we go to the golden crossover, it help you a lot. So now, and the CPR, which will ask you to how to take the target. So the price was, as long as it's walking, okay, as long as it is walking, touching to the band, you can beat the trade. You can get
Okay.
out here. You don't have to wait for this one, because this is the, you can easily take this one, but usually you don't have to wait until this part. Once the price moves away from this one, you get out. And usually when this kind of thing happens, you will get good money. Like this is like
Okay.
about almost 2%.
Right.
Okay. Now, even here, now when you were seeing it on the, and when this price is going touching the band, you can be with the band. Just take your trade according to the band, okay? And it gives you like almost 1.25%. 1%
Okay.
is very good for the day trading, right?
Yeah, for sure.
Right. And next day, if you see here, I'm gonna undo this one. Now, if you see, it was taking a support. I'm gonna close everything. It was taking a support here earlier. And what was the changing trading point here? Because it took this resistance, fall, resistance, fall. So now this area, not this one, I'm gonna cancel this one, and I'm gonna make this one as a red so everybody can see properly. Okay. So now next day, right? Either if you are very good at the trading, you can see the, okay, it took the support, So one theory, first theory, which was like support, hammer, the second candle was above the closing. Boom, you can go. Right? Can you?
Right.
Right?
Yeah, that's true.
Second, it, and if you see here, it found the resistance at the same level, but the next candle was above the previous candle. So you can be in the trade, and it was going along with the band. Okay, going along with the band. You can get out anytime here. So if you combine both the theories, you would have made 5%.
Right.
It's not just the one theory. It's like combined theory. Okay. I'm not talking about this one because I don't know what's going on over here. Okay. We haven't talked about the golden crossover. So I'm not gonna talk about this level, whether you can achieve that level or not. But by the first theory, taking a support like a hammer, second candle close above the hammer, take the trade, stop loss below, and you run. Okay. Now let's found they're different, right? Like not on the one. Let's look on the second side where you can uh, go and check it out. Okay, so this one was like narrowing of the band. So previously you saw this was like a narrowing. The pre-hour market was a low. So you can expect when it's walking on the down, you can expect that okay, price might come because the band is giving you a signal. And then the live market, it will give you a signal. Okay. Let's say if I want to go ahead here, I'm gonna find the good so you can, so here, do you see band was narrowing, and the next time the price went up, and if you just follow the band, you will at least make 2%. Just 2% in like how many candles? 3 candles. Because if you see again, you have to look for the resistance as well. You don't just ignore the resistance. Here was the resistance earlier, right? Band was narrowing, resistance was there. You see the first candle kind of open up, second candle is going. So even if you go at somewhere here, third candle, you would have made almost 1%. Almost. Does it make sense to you?
Yeah, totally.
Right? And this is we are doing a back testing here, right? So we need to see every time. Okay, so now here, look at this scenario. What happened to the price first? The price kind of stayed in the narrow zone. BB band was like a smaller, and the next day it took the open up before it, and now is walking, right? Is walking on the band. You take it, and even if you are here somewhere, if the next thing is, if the price is not able to break the 20 SMA, that means it's taking a support all the time, you can be in the trade. Okay, if you really want to take a risk, you can trail your stop loss always from here to here, here to here, and then here. Like keep it here. Once the price moves, bring it down. Once the price moves, bring it down. Because what we said earlier, price will go move up and down like this. So your stop loss shouldn't be here. It should be below that previous swing low. Okay, does it make sense here so far?
So Jigar bhai, we should close our position as soon as the price goes below the 20 MA.
Yeah, you get out.
Yeah.
You get
Okay.
out, right?
Sounds good.
Because the high chances of it to go down is pretty much high. So for an example, earlier, if you see here, price went above, closed like here. 20 SMA is also work as your support and resistance, as we discussed. If you see here, this was probably resistance, right? You found it here for an example. It closed the below for the previous, like like a low of the day. Price went down, price went up after the 20 SMA took the support and then again went, right? It broke it, it tested again, and then it went up. And when it broke it, if you see here, it broke it with this one, went back, tested here again, and then fell the price. So the price will always give you a chance 5 minutes or the 10 minutes earlier, most of the time, to get in and get out from the particular trade. But this is the 5 minutes, that's why. If you go through 1 minute, it will be like very chaos. Okay, let's see. Check it out on a 1 minute. See, 1 minute doesn't give like an idea, right? It goes up and then it comes down again. We don't know when it's gonna come and down. Like this is like 1430, and here is like 1443. Within 13 minutes, it fell. We don't know, right? But theory is the same. Like if you see the price, like a hammer is here, hammer is here, hammer is here. Okay, if you see here, this is the hammer here, kinda hammer here, hammer here. The price doesn't fall without letting you know. If you ask the chart will let you know that whether it want to fall or not. Even here, see, next candle was fall, next candle was fall, but it gives a like a false idea if you are the smaller time frame. Okay, that's why I want you to get used to with the bigger time frame, like a 5 minutes, 15 minutes, right? And then you will get the proper trade. For the 1 minute is almost, if you want to do for the pump and dump, not for the blue chips. Okay, everybody understood here how to use the Bollinger Band?
Jigar, one question.
Yeah.
So when you showed the width from narrow to
Yeah.
wide, right?
Yeah.
So and then there was a price change, either it is going up or high.
Or down. Yeah.
Now, how is this width defined? Is it based on volume?
Yeah, no. This way, the if you go on the detail for the inputs, usually the standard deviation is 2, already given. So I think it's kind of more of an average. So like the if I want to explain this one is like most of the height of the people is like say 5.5, 5.6. Okay, like overall, like now that will be like 60% of the populations in overall the world. Height will be between like 5 to 5.6 or 5.8. There will be an exception for the 6.7 or like 6 and above or 5 and below, right? So whatever the standard deviation they are taking is taking the maximum average for the particular price. So on the setting, it always give like a 2 standard deviation. Let's make it as a 3 standard deviation. And if you see here, 3 deviations is like not gonna touch the band. And if you do the 1 standard deviation, you will have the very narrow, like the price is always going out from the band. Let's see for the 5 minutes. Let's for the 5 minutes. So yeah, see, the prices always goes out from the band. And if I put it for a 3 deviation, right, price not gonna touch the band, right? Price is like hardly touching the band. So that's why when they did, like whoever found it, I think the name was Mr. Bollinger or something, he found a couple of indicators. He figured out the 2 works better when it comes to the Bollinger Band. With a 2 deviation works better. So you don't change it anything on the Bollinger Band, just keep it as usual. This is the standard, and most of the traders use these standard deviations because it gives the better result. Because whenever, if you see, whenever price touches the band, it will react. If it goes outside the band, it will come back again.
Got it.
Right?
Yeah.
And
So the more the standard deviation, if we change the standard deviation to higher one, it's probably going to consider the outliers, and the width will be.
Yeah, okay. It will be different, and it will be very hard to predict.
Right.
The price, right? But if you see, whenever you see the price is going outside the band, it will immediately come in. Okay, let's see, check it out. If it goes outside, it will come back. Let's check here, okay, whether it comes or not. It has to. See here, price went outside, it will come back. Okay, even here, this narrowing, it has to come back. So here, outside and then come in. Do you see? So even here, see, that means like you be cautious that, okay, price is going too much outside, it has to come down a little bit. Okay. And okay, let's see the last example, and then see, check it out. Price has to come in. So that's why he says, like, if the price is not along with the BB, you leave the price, like you leave the trade. As long as it's with the BB, you stay with the price, you stay with the trade. Okay. Everybody understood how to use the Bollinger Band? I'm not sure. Did anybody use the Bollinger Band for the trade or no?
Yeah, one question, Jigar, regarding Bollinger Band.
Yeah.
Yeah, when it is going to squeeze and it's narrowing going on, continuing,
Yeah.
at what stage you can identify that that's the point after which it is going to blast? And
Okay.
will that be bullish or bearish?
So
Can you please? Just,
yeah, okay, yeah, I did mention earlier, but if you see, this is like a band. So now
Mhm,
this is for the daily time frame. Okay. Now, if you see, the price is narrowing here. Okay. The price is narrowing, is
mhm.
consolidating. Okay. Now that means it has to blast either up or the down. It has to give the breakout, or it has to do the continuation.
Yeah.
Only three things can happen. Either it can go on the range bound, or
Mhm.
it can blast up or break down, right? Now, so now when you are watching those one, I'm gonna have those one. And when you have the Bollinger Band, this is on a daily. Do you see the is narrowing down?
Mhm.
So now here on the daily time frame, the time when the Tesla was bullish, it was all the way to the Bollinger Band. It never touched 20 SMA. It will come down, like the price not gonna always go like up. It will come down, but every time the price was taking a support at the 20 SMA, right? And for here, so for an example, it went out. Next day it was still stayed out, but then the following day it came back in the price. It went up, it stayed in, but then the price well came down. Even here the price went up, like it's going outside the band, and then it has to come down inside the band. So as long as it's the 20 SMA taking a support, you can take a long trade. If you are a long trader, you can take a trade for the longer period of time. You can hold it. You shouldn't be getting panic, because this is like a more what you call stronger support level rather than the 5-minute chart, right? As I said earlier, this is the daily, right? So
Okay.
when you see this kind of scenario, you need to look for, okay, now you have to be ready for the blast. The price has to walk along the band.
Okay.
Okay.
So when the Bollinger Band it's
Even
about to blast,
yeah, here,
at that point we should take the entry, right?
yes, you take the
Okay.
entry port, and even here, check it out. Look at this one, so narrow, and the price
Mhm.
went up, and within like how many days? 7 days or 8 days, it gave like a 60% return, right?
Perfect.
When the even here the price was on the range bound, when it went, it gave almost 50% return. So always look for the narrowing of the band. Once you get the narrowing on the band,
Mhm.
it's the trade you want to get in.
Okay, perfect. And the candle patterns at the neck, can you a little bit elaborate those as well?
So here, if you
Yeah.
see those
Mhm.
candle, okay, let me go now. They always like whenever these band is narrowing, the price gonna go on a range bound. Okay, you won't see too much. Even let me see the volume. There is some volume, but not much. The volume is kinda coming down. So now you don't buy trade here anywhere. Let it break. Okay, I would rather buy at $223 rather than $200. Why? Because you never know, the price may break down. Once you get the proper confirmation, then you go in, and then you'll get the proper result. And this is good for the swing trading. So like here, if you go with here, you'll get at least 50%. And what happened next time? The price went again on a sideways. Okay, price went again on the sideways, and it gave the breakout from the previous swing high, and then you go again. And after 5 or 6 days, look at the BB. What the BB is saying to you? BB is saying, okay, now I'm done, right? I'm not with the band anymore. That means you need to be cautious that, okay, I have to get out, right? Even here, when the price is not with the BB, you get out. It would have happened like narrowed for like, see how many times, how many months it kind of narrowed here, and the time is almost 53 days. The price was on a range bound, and then when the price gave the breakout, the previous high, whatever the previous high, was broken with the volume. Okay, it tried one time, failed, then kind of came back and took the, like, bulls came in and it gave a good breakdown, and you get in here and go with the trend. You might get out here as well, doesn't matter. At least you got how many for the 5 days? You got 15% or 16% return. What you need, that's almost 5% a day for your capital.
Perfect. Thank you.
Right, so that's how you, and again, you need to spend more time, right? If you
Okay.
just spend, if you don't spend time, you won't be able to understand this kind of concept. I'm not sure anybody did kind of this kind of research before, right?
Thanks.
Right. Okay, so this is Bollinger Band. Okay, now
Jiga,
yeah.
one question. So I was just recollecting what you have discussed right now.
Yeah.
When the band is narrowing, then the wait for the 2-3 candles is going up and down. Then you decide your trade is you want to buy or just wait. Okay.
Yeah, you just have to wait when the band is narrowing, like band is narrowing. That means you have to be prepared and look for the what was the like high, last low and last high, last swing lows and the swing high. So for an example, the band started narrowing here, right?
Yeah.
So I'm gonna close this one. This is my high, this is my low, and if you see, the price was inside that range.
Yeah.
Okay, second thing, for the confirmation, okay, all is all about the confirmation. If you see, the trend is up. Okay,
Okay.
trend is up, is making a higher lows, but the price is not making, is going on a like a range bound. Third thing, which I'm gonna, you can look here as RSI for the confirmation, right? This is RSI. I'm gonna, volume is down. Let's see the RSI. Does it make you any signals or not? Because not all, every time the RSI gives the signals. Okay, 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 okay. Now here the price is up. Okay, no, it doesn't give the divergence to us.
Okay.
I'm trying to see if I can get the divergence, but there is no like a clean indicator which
Mhm.
gives like, this is the direction now. So now, so but if you see, there was a pattern, I saw the pictures, like it goes up, goes to sideways, and
Yeah.
it has to break up or it has to break out down.
Yeah.
Don't be bullish or the bearish. Just look at the trend, what trend is saying, go with the trend, doesn't matter.
Oh, sure.
Okay.
Okay, thank you.
Now let's go to the next one. Very important is your support and resistance. For it's called CPR. Okay, go to the indicator, look for the CPR for the Gomti Sankar. Okay, Gomti Sankar. When you place that CPR, the chart on a daily will look like this. Okay, there might, you have to do some adjustment here. So go to the, sorry, holy, what happened? So go to the trading, the setting. You need your daily pivots, you need your weekly, you need the monthly, you need the previous day high, previous day low, and you can change this color the way you want it, and you have to uncheck, uncheck this kind of stuff, and then go save it as a default and do it. Okay, now this is very good for the 5 minutes chart. Okay, 5 minutes chart. So it will look like this, very much like this. So what you do on the trading view, go on this price with the cursor and do the proper pricing, and you will be able to see the price, right? Can everybody understood, or it is too fast? Was it too fast, or is it?
Can you please explain that a little bit?
Okay.
Yeah, just a little bit. Can you explain
Okay.
that again?
So go to this trading view, look for the CPR for the Gomti Sankar. You can look any other, but I find this one better. So Gomti Sankar. Then go to the inputs. You need your daily, you need your weekly, you need your monthly pivot. You need the previous day high, previous day low. And then on the style, you can change this color. This is like a resistance R1, R2, R3, R4. You can take the support R1, S1, S2, S3, S4. This is the tomorrow pivot. You can change the color, the weekly pivot, and the monthly pivot. You can change all those kind of colors. Okay. And then go save it as a default, do it okay. So, and on the this price, go to the price and you will able to move up and down so you can see the picture correctly. Okay. Now this CPR, this purple line is called central pivot line. This is the upper pivot. This is the below pivot. Okay. So usually pivot points are the points where you find the support or the resistance. Okay. But when you have the CPR, it gives the range for the particular support and the resistance. Usually whenever you have this narrow CPR, this is very narrow and this is little bit wider because it has a gap between the all the line. When you have the narrow CPR, the market will be like trending. So it will be like go either up or the down. Whenever the price is like a narrow, like a wider CPR, the price tend to move on a range bound. This was like not that narrow, but I will show you like a narrow, like very wide. So this is very wide, and the price goes like a sideways. Sometime, like most of the time, it goes sideways. But like this was the very wide, but the price went downwards. Here, the price went up. So how to use it? Okay, how to use it? That's what you need to know. So whenever the price comes specifically in the morning, this will act as your very good support and very good resistance for your trade for particular day. This is not the lagging indicators. Okay, understand, this is not the lagging indicator. In the morning, after the 5 minutes, you won't see the whole line, but you will start seeing this like a dots. But you can draw the line within like 1 minute or 2 minutes because this is all predefined. Okay, in my chart, whenever you see this like orange is either previous day high, previous day low. The red one is sub weekly no, green is the weekly support, weekly pivot. Okay, wait, what did I, red is the support and resistance like S1, S2, S3. Okay, and yellow is my weekly, black is my monthly pivot. Okay, pivot is nothing but the support level. What was the monthly support and the monthly weekly support? So now let's see the Tesla here. Look at this trend line. When the CPR was here, price went up, right? Broke the CPR, and the entire day, even when the second time the price came, it took the support from the CPR, right? So this will be your helpful to put your support and the resistance. Okay, usually the price CPR is very stronger in the early morning than in the late afternoon. Okay, somebody's asking question. I can't hear you. I think it's the problem in your side, iPhone. So I think everybody's can able to hear me, right? Can everybody hear me?
Yeah,
Yeah.
Yeah.
we
So
can hear you.
yeah, I think the problem is on your side, buddy. So check it out. You can get out and come back again. Okay. So on the CPR, it usually takes the support or the work as a resistance. If you see, this was the resistance. Your day high, like the previous day high, previous day low, pivot, they all has a meaning. They will help. They will act as a support and the resistance. If you see this is my orange line. This is the previous day high, right? So it took as a resistance, then price didn't go and close. It did close after that one, the previous day's high, but it couldn't sustain, and then the price went down, right? So this one with the pivot, you can decide, okay, if I'm taking a trade here, I can try to get the first pivot as my target. Okay, so the first target is usually like 2%. Okay, and when the price fell after, and now once you have those one, put the boom, and look at the how the Bollinger Band work at the same time. The price was going out from the Bollinger Band at the same time, right? On this support, it was checking a resistance, went sideways, and the price fell after that one. Sometimes price take a reverse from here and then go up, right? So this will be your like a next what you call a resist, your stop loss if you're getting in the trade. Does everybody understand what I'm trying to say? Or any questions so far? Or anybody used this CPR before?
No.
Nobody used it. Okay, good.
Jigar, what would be the ideal settings for CPR to understand it? Because you guys see that there's a lot of
Yeah, a
noise.
lot of like, so you need your daily, you need your monthly, you need your weekly. Okay, then you can have the at least 3 support and resistance, and then it will be very narrow, but you have to go with this one, up and down, and then you can see everything. If I don't do it, sometimes it doesn't give like a good idea. Okay, it will look like a too much information on the chart, but actually it's not. Like, it's not that big information on the chart. It's like a proper information need. You just need to kind of go up and down to find the proper informations. Okay, so now earlier you can see here the price took the resistance from the S1. So that means like it can come and take the support here. If you want to go long, short, you can. But once it broke it, your next target will be like a day's low, like the previous day low, and then S1. That will be your target. You won't be targeting for these things, okay? And I will tell you, you can target that one too, okay? Once we go to the golden crossover, you have a chance to take the bigger target, okay? But now, if you don't know anything, this will be your first support is your target, then the second support, and then if you see here, it can come to the third support. So first and the second pivot will be your target if you want to take it, okay? Now, if you see here on this side, it took the support here, but and at the same time, you have to remember what was the earlier days where the price kind of changed, took the support and resistance, right? This is like a swing high where it took the resistance. So you have to have those one in your mind. So the price took the support from the previous day swing low, and then it gave the bullish candle here, and it gives the closing above the CPR. So closing above the CPR, that means you can go bullish and take a 1% or 2% here.
Jigar, can you explain that again? Sorry.
Okay. So if you see here, this CPR, price broke the CPR. That means if you are like a long here, for an example, if you are a long here, and if you put the stop loss somewhere, it was hit, right? But when you know that, okay, this was the support and resistance from the previous day, you cannot ignore the support and resistance from the previous day, right? You need to know that it was the support and the resistance from the previous day, right? Even here, this one of the support and resistance, and it took the support at the same time. So when the price took the support from the earlier, once it broke the CPR with the volume, with the like a big candles, you can go long here because it broke the CPR. You don't have to wait for this candle to tell you. You can get the entry, but you can go long here after this one candle, because the second candle, once this candle is like about 4 minutes and like 40 seconds, you can go long because it didn't give the closing below the CPR. Okay, the price was almost like somewhere here. So you can say within like 10 to 20 seconds, the price not gonna touch it. It's not gonna touch it, right? So you can go long here rather than waiting for this candle to form and then go long, because then you will miss your target. You will still get a target for about 1%, but you will miss out big, this like almost like 0.25% extra. You would have get it, right? It makes sense. And once the price broke the CPR, you can go short. But again, you have to remember what was the day's lows and where it took the support. You need to remember that too. That you need to wait for until this closing below this line to go short. You can just go short because it gives the bullish candle. You can go long, like you can go short, but your stop loss will be here. You have to get the stop loss. Okay. Otherwise, you will lose the money. So if you have get somewhere here, your stop loss was like 50%, which is good. Yeah, and your target will be like 1% somewhere here. And you lose the money here. That's fine. It happens, right? You cannot win all the time. So CPR, let's see here. Look at the price. Price broke the CPR. You can take the trade, and at least you would have got 1% almost. Okay. And here, this is the good trade. Okay. This is the good trade. Now, we discussed this one earlier with the Bollinger Band too. So the price was taking a support from the previous day, gave the height. So your first target will be this one, okay? Like this one, like 1%. But at the same time, when you have the Bollinger Band, you can see, yeah, okay, price is taking a like kind of going the narrow, it was a narrow be earlier a little bit. Price is going up. Let me be the trade and kind of trail my stop loss. Okay. And then you can, once it break the upper, like this CPR, either you can take a trade here or here, doesn't matter. Your first target will be like a 1%. And then if you went again after this one, like not here somewhere, but after here, once they break the day's high, the previous day high, you can go one more time with the entry for the second target. That this one gave like at least 3 entries to you. 3 entry. Why? Because from here to the CPR, from CPR to the first target, and the previous day highs to the second target, it gave you 3 entry, right? But again, it's very easy for me to tell you in the stack chart because it's already made. But at the same time, your stop loss will be here if you are going high, and your stop loss is here, and your stop loss will be here. Okay, this will be your first stop loss. This will be for your second stop loss. This will be for stop loss for the third entry. Does it make sense? Everybody understood what CPR is trying to tell you and how you can use it? Any question or concern? Okay. Okay. Anybody used this one before or no?
I used pivot points, not exactly CPR, but the pivot points.
Pivot points, yeah. But let's say like compare the pivot points and this one. Okay. Let's see. Okay. And pivot point standard. Okay. Now I'm gonna change the color so everybody can see. Pivot point. I'm gonna make everything black. Okay. So it kind of comes out easily. Okay. Okay. So now, if you see on these pivot points is the same, right? But this gives a little bit of range, right? And this range will act as your good support or the resistance. So most of the time what happens with the pivot points, your stop loss gets hits, right? Have you used the pivot points and your stop loss get hits because even though you use the pivot point, right? Even here, if you see here, the pivot point would have hit either side. But if you use the candle And don't just put it at the candle. Give some like a break, right? Because the more tight you put the stop loss, more it's gonna get hunt. Okay, let's compare the CPR and the pivot point like for the next one. See here, S3, this was the pivot point S3, whereas the CPR give you the target like a support up to the like a lower level, right? Whereas the pivot points only give the support here, like 1, 2, and 3, right? It's coming close to the like a line, like a support level, but it didn't give like a proper all these support and areas. Like look on those one. Here, S3 was here, and then here if you see, this is S3 for the pivot points. Okay, so it gives a good range of the movement for any particular stock. Okay, does it make sense to you, the difference between the pivot points and the CPR? Yeah, it gives some broader pictures than the pivot points. And if you want to use the pivot point, use with the Fibonacci. Okay, this is the Fibonacci and this is the traditional. Let me see, this is the traditional pivot point. Whatever you are seeing is the traditional pivot point, the orange one. Use with the Fibonacci if you want to use it. Don't use the simple pivot points. Okay, I don't use it pivot point anymore, but just to kind of give you, if you want to use it, I like the CPR better once I kind of started it using. Okay, so now anybody has any question or concern for the CPR, so we can move on to the next session, and then we can combine all together and then see how the trade will look like. Any question or concern? No.
No.
Okay, now the next important one is golden crossover. What is golden crossover? So when the smaller time frame crossing the upper, like the higher time frame, either below or the above, and they meet at the one particular points, like say this is like a here and is going here, one is coming here. So this called golden crossover. Okay, golden crossover, you can use it with the Bollinger Band to help you to stay in the trade longer. And when you use it with the CPR, that means you know what will be your target and when you should expect to get out, and where you can expect there will be the resistance or the support for the particular trend. Okay, so we're gonna combine golden crossover, Bollinger Band, and the CPR for the day trading. Okay, now I'm gonna plot EMA for 9 and 18 EMA. Okay, so 4 is my green one, red one, and then the black. I would say purple. Put it purple. I will need a 200 later sometime. So okay, so I have 4 EMA, 9 EMA, and 18 EMA. Okay, and I'm gonna put it on okay. So now time frame will be 5 minutes for any stock you wanna take. Okay, now let's see how does it works as a wonder. Okay, now can anybody tell me that which one is the green one? Even if I don't tell you, can you tell me which one is the green one?
4.
Or which one is the red?
9.
9.
9.
Because
And
it's
then
away.
18.
18 is right. Okay. The closer to the price will be the smaller time frame. Away from the price will be the higher time frame. Right? Because this is the average for the last 4 minutes, whereas this is the average for the last 18 5 minutes candle. Right? So the price stick to the smaller time frame. Okay, whereas the higher time frame goes a little bit away from the time frame. Okay, now so remember first rule, it has to have the crossover. 4 should be closer to the price, 9 should be in the middle, and 18 at the below if you want to go long. If you want to go short, 18 should be on the top, 9 should be in the middle, 4 should be in the bottom. Okay? Does everybody understood the rules? Everybody got the rules?
The second one you kind of talked about, it's like when you know the price is coming down and not going up. So when
Yes.
you're basically, okay, makes sense.
So if you are like long, 4, 9,
Mhm.
18. If you are a short, 18, 19, 18, 9, and 4.
Yeah. So the first one is basically for the calls and the second one's for puts.
The puts, yeah. Okay. So now, do you see the price did kind of cross over here? And I'm gonna move the Tesla here. Sorry, not Tesla. Price kind of coming crossover. The smaller time frame is crossing 18 and the 9, and they are now separating here. Does it make sense to you guys? Are they separating with each other? Yes or no? Is the price
Yes.
is separating with okay, the EMA? Okay. Now, if you see here, the smaller time frame is coming down, 9 is crossing over 18, right? And if you see here, the still 18 is still on the top, 9 is still in kind of middle, and 4 is kind of coming here. So you might see those kind of scenario all the time, right? Now look at this example. Okay, here, do you see that crossover kind of happened? Like 4 was on the top, cross the 18, cross the 9, cross the 18, 9 came in pictures, cross the 18. Now they are separating with each other. Does that gives an idea like how the price kind of moved?
Yeah.
Okay. Now if I put the Tesla here, what do you see here? So if you know that this is the golden crossover, if you take a trade, when you would get out? Are you going to get out here, or are you going to get out here? Where are you gonna get out?
The first stop.
You can get out of the first, but usually if you want to hold your winners specifically, do not leave your trade until the price comes and closes above the 18 EMA. Okay, or unless you see the price reaction, unless you see the support and the resistance. Where we see the support and resistance, let's see here. You would have get out here if you want to, because it was a resistance here, like a support here. You can wait to walk again, because every time when the price goes up and down, it has to retrace somewhere, right? It has to go up and then fall. And we will talk about that one when we'll talk about the Fibonacci, like in a few times. You can, and you see here as well, it took the resistance here as well, and then it fell. So you can either get it out on 18, because the price gave closing above the 18. Even if you give the closing above the 9, you can get out, because the price can shows that it kind of do the reversal. Okay, let's do some more example. Everybody understood?
How do you know where did you enter? Like,
Okay.
so if that's the trade you're talking about, that means you kind of lost money in that trade.
No. You haven't lost the money in the trade yet. So whenever you say, like, you have the CPR, okay, how many confirmations you have now? Okay, where is my Bollinger Band? Okay, Bollinger Band. Okay, now this is my chart. Looks like it will looks like very messy to you. For me it won't, because I won't be keeping everything at the same time. So right, once you have the CPR, you can draw the line and get out, right? Like, let me draw the line. This is my line, and I know this is my CPR. Okay, I'm just gonna draw the line to get rid of the CPR. Sometimes CPR, not everybody like the way the CPR looks, but I'm gonna get the CPR off, right? So you know this one, I don't need a, now those lines I'm gonna turn off. Let me just cancel it for a time being to make it easier for you. So now, so I don't have anything on the chart, right?
Right.
I just have the Bollinger Band and this one. So now, once you have the Bollinger Band, you know that there was a CPR because you, in the morning, you have checked it already that you have the CPR. You know that, okay, there was my line for the CPR, which has to broken. Okay, so I'm going to turn on the, so this is my entry, right? Because you want CPR to close here. Now you got the confirmation from the golden crossover that, okay, these are the separating. Okay, these are the separating. The my price is going on touching the band. So let me enter here. Let me keep my stop loss somewhere here and let it ride. Okay, what will be my target? Because I don't know, right? The price CPR was saying, okay, you can get out here, and the second CPR was saying you can get out here either. Okay, so I'm gonna turn off the CPR again. So from here to there, okay, from here to here, how much you made? 125%. 100
Mhm.
1.25. That's a good one,
Yeah.
right? But you see the price here is still below the for EMA. That means there is still might be some juice there because the price is still following, like going down. So you can be there with the trade, right? And you might be able to get this as well, right? You know, this area as well, like from verse 1 to the second. Okay, when you see the price is moving up, taking a support, either you can get out here or you can wait. You can get out here and wait until this 9 EMA is broken, until you get the closing above the 9 EMA. Okay, not the touching, closing above the 9 EMA, you can be in the trade. Okay, and then price went, and if you see here, it gave the closing above the 9 EMA. You would have gotten out here, that's fine. If you want to ride, you can ride up to here.
But
Okay,
you said you kind of entered earlier. So
you,
if the
you,
trend is coming down, obviously the price is decreasing and you're losing money, right?
where are you losing money? You
No,
entered
but
here.
what was your entry point?
Your
What was
entry
your
point
entry
was here.
point?
Your entry point was here somewhere,
Okay. And so where's your exit point?
either here or here.
Right. So explain me how you're making money on this trade.
So you short it, you short the money, and you got,
Oh, okay. You're talking about shorting it. Okay, that makes
yeah,
sense.
because it's a downtrend.
No.
If you see the price is
Yeah.
down, you're shorting, you're sorting down. Okay, you are confusing about the call.
Yeah. I was like, okay, if the trend's
Okay.
going down, why are you saying that it's gonna make money?
No,
That
no,
makes
no.
sense if you're shorting it. That genuinely makes sense. Just a second question. So whenever
Yeah.
there's a golden crossover, you're saying that the trend is gonna go down. It's not gonna go up.
Yeah.
Is that the significance of the golden
So
crossover?
whenever you, like, not all the time, but whenever you see this is your could be entry point, you might be getting at least 3 to 5 trades in a
Mhm.
10 days. And when you get those kind of trade, you will hit your good targets. Okay, so this is the first one. Okay, let's
Okay.
count it as a fun. Okay, let's go 10. Okay, like this is fell, right? You would have get the money here. This is your like a
Mhm.
trading point here. Second trade will be like here. You would have made some money,
Mhm.
like 1%, you get it. But even here, if you get out, like if you get in with the band and everything, you get 1%. But we will say this is like a wrong, it's not a good trade. But if you see here on this trend with this CPR, that's what the CPR says, the price did not close it above the previous day low. You either get somewhere here, like over here sometimes. You might be able to get it up to here, 1%. You might be, not more, because the price didn't kind of help us. So let it as a fail. Let it as a fail. But when it kind of goes like here, let's see. I'm going to turn off the CPR, okay? Let's do the back testing. Okay. So here in the morning only, you can see it was like a golden crossover. You took entry, and as I said earlier, once you know 1% or 2%, you get out. You don't have to wait for like 5-15%. But and again, it was in the CPR, so it took the support at the CPR. If I was you, I would avoid this trade at all because it's in the CPR, so it will be range bound. You'll get entry here after the CPR. Don't get entry in the CPR unless you want to do the scalping, okay? Or you want to get with this like 4 is here, 9 is here, 18 is here. Probably you might be able to get entry here. Sorry, you might be able to get the entry here because 4 is here, 9 is here, 18 on the top. 4 is crossing the 9. You can be in the trade. And again, the resistance was there with the Fibonacci. If you put it, let me show you the just for a Fibonacci, just for a time being, from the top to bottom. Okay, I'm gonna close everything here just to get the confirmation. Okay, Fibonacci level was 878, was kind of more of a, like a final resistance. Then it might fall. Usually the 50, 61, 38 and 78, those are the more of a good resistance or the support level. So it fell from the 78. Now you got the like a signal from the uh, golden crossover. Now you got the signal from the BB that okay is not crossing the 20 EMA, 20 SMA. Now you have the signal from the 18 EMA. So all signals come together and then give the confirmation that okay you can be go into the trade. Not only one signal. You know what I mean? Because this is the 5 minutes, and it's not like that you don't have a time. You have plenty of time to analyze these things, right? If it's 1 minute, yeah, you don't have the time. But for the 5 minutes, you have the plenty of options, plenty of time to analyze these things. Now look at this one, 498. This is the good one, right? Good example for the long. What did I say?
Makes sense because like
Do
because you
not,
have a crossover.
yeah, do not get out until the price gives closing. And this one gave the closing here, okay? But you just have to wait for the next candle where it opens, okay? Always remember, when the next candle opens, if this candle opens above the like a low of the previous candle, this was the closing and the low of the previous candle, you can still be in the trade, okay? Take a chance here. Take a chance, and if you want to get out somewhere here, because you're gonna trail your stop loss here anyways, right? By the time you are here, you are with the BB as well. BB is helping you as well, right? Okay, the trend is uptrend. CPR is telling you that okay, is uptrend. Be with the trend. Is not breaking 18 EMA, right? As long as not sorry, it's not breaking 9 EMA at all. So as long as it's not breaking 9 EMA, be with the trade, and the price will come and break the 18 EMA, and then you get out. And those trade, when you get it, that will give you like 6-7%. This is your make or break trade for the entire week. Suppose if you have the call, and if you know the let me be in the call, rather than getting out at like a $200, you'll make $1,000. Right? Sometimes the price, if the price comes to the like 9 level and break it, you get out. Right? You don't even have to wait. Get the profit. But what happens for us, like as a day trader, sometimes we lose the big momentum and we get out so early because we want that, okay, no, what? I want to get out. I don't want to lose the profit. But you lose the big profit. Right? Does it make sense?
Yeah.
Okay. And look at the next day, the golden crossover. Does it work like a charm? 4, 9, 18. And if you get out here, where you got out? You get out somewhere here. And look at this one. If you have the call or the bot, you would have make almost 3%. Rather than making 8.8% or 1%, you're making 3%. Big move. Right? And you might have get the second entry too if you want to. Look, it was a shorting, now it's like a closing. Right? You would have get here from here to here at least 0.80% if you want to for the scalping. But when you get the 3%, get out. Don't wait. Why to wait? Close the like a day and go. Even here, if you see here, 18 is the last resistance. Okay, 18 will work as a last resistance for you. If the price goes above the 18, you are done. If you are like risk trader, like a taking like to take a risk, wait until the 18 is broken and give the closing. Okay. For the smaller, like a, not a risk trader, four will be your okay. If it comes to the closing the 9, get out. For the risk trader, you can wait for the 18 to give closing above it to get for the higher trend, like a big movement. Okay. So let's see here. In the morning also, right? You get out, like it gives a good closing. Like it would have made on the next day 185, and you get out like here somewhere or here. Closing up to you when you want to get out, because that at the same time you are focusing on the BB as well. BB is telling I'm going away. CPR is saying okay, I'm at the resistance support level. You wanna be cautious. Like how many confirmation you need? You have the EMA which is telling you to be go into trade. CPR is telling you that okay, I am providing support. BB band is saying I'm going away from the price. That means like you have to be cautious, right? Does it make sense, everybody? This is like a $1 million like a strategy, guys. Okay, I'm not sure how many people knew this strategy. Anybody used this kind of strategy before for the day trading?
No.
No, right? Nobody used this kind of strategy. So this strategy, it will help you to make good money for the what you call the day trading. Okay, just give me a minute. Thank you. 11 minutes is okay. So now, anybody has any questions so far? Anybody has a question? Hello? Any question?
Can you just explain the Fibonacci thing again? Because like
Yeah,
we know you kind of talked about it, but
Fibonacci,
just
we're gonna come. Fibonacci, we are coming.
Okay, alright,
Fibonacci, we haven't touched it. And
sure.
so that will be the last one, and then probably we can do the back testing and everything. So,
Make
Jigar, one question.
yeah, go ahead.
Do you consider volume in any of these?
I never. Did you see me taking a volume anywhere?
I didn't see.
Yeah, no, I don't pay attention to the volume. Attention to the volume, you need to pay it when the price is like a range bound for the longer period of time, right? When you are buying the like pump and dump, then you have to see the volumes and other stuff. These are the very liquid stock. Those are the blue chips. Even not this one. Like let's check out Apple. Okay, I'm checking this one, but like look out the check out the Apple. How does it work? Okay, and let's put the golden cross over here. Okay, even for the like Apple, check it out. Once you have those one, like you might get the like your stop loss is hit, but when you going up, you get at least 0.80% for sure, right? So you might get one losing trade, but like couple of good trades like here, golden crossover, short it didn't break the 18, keep on doing. Your Bollinger Band is showing you are down. Your CPR is saying I'm to accept my weekly like a monthly CPR was a rejection, went again, it was a rejection. Now you need to take a trade, and you will get this what you call, once you practice it you will learn more. Okay, it's very hard to tell on the like this chart because already made it. On the live chart, it's very hard to control the emotions even for me, right? So when like what happens, like sometimes when you see the price coming at to this level, you want to get out. at the same time, you have to see like what was the resistance earlier in the live chart. So you have to wait until this resistance is broken, because this is, if you see, it's like a more of like a shoulder, and this is not a, like a big shoulder, but this will work as a shoulder too, because the price is like kind of coming in the range, taking a support at the same time, broke it with the big volume candle. Okay, you might see the candle volume here. Let me see the volume. Okay, what's the volume here? Sorry, volume is not coming up for me. Sorry. Yeah, but if you see, when you see the big candle, whenever the support and resistance is broken, always remember it will be like a big candle. Okay, and the candles are like getting tinier earlier. Like this was a doji, right? And it was where the doji came in the live trade at the same area. It gave the closing. Always give the more preference to the closing than the high. The high, you can help it to put the stop loss and the target, but closing gives an idea what will be the biggest resistance area. Okay, that's why I said closing is more important than the high, because if you see here, this area, you can see this is like a more of a supply zone. So if the price come at this area, you don't want to go long, you want to go short at that area, right? Because this was the high as well as the swing. It was the high, like a swing high for the previous time, right? So you don't want to go short, go down, don't want to go long at that particular area. And at the same time, even though you would have got it here, you want to get out here. You don't want to wait until the price comes down and hit your stop loss. Does it make sense, or it's kind of too vague?
Yeah, can you repeat that kind of one by fast?
Yeah. I never pay attention to the volume unless it's a what you call range bound or the pump and dump stock, which I'm pump and dump stock. I'm kind of not doing day trading anymore. I more focusing on the options, because that's where you make the most money with a small investment and target, right? So look at the Apple on the nice trending day. It would have given you almost 3% for the Apple, right? That's all like $4 on options. You would have on $400 or more than that, because the implied volatility will be very high.
Just, I know it's out of the context, just wondering out of curiosity, are we ever going to do any lectures or lessons on options, like, whether it should be in the money or out the money, or how should we conduct those?
Like not here, because that's also like a different topic. Not many people do understand what's the in the money, out the money, because the time is less. We did had a sessions earlier, like Harshul Bhai took the sessions earlier about the options. But if I want to just conduct the options, try to buy options in the money or close to the money.
Makes sense.
Okay, close to the money or in the money. So that will help you to minimize store, as well as try to see if you can do the hedging. Hedging is like,
Right.
for an example,
Yeah, buying a call and the buying a put.
Yeah, no, not that's not called hedging. So buy 130 call for an example and sell 135 call.
I see.
So that means you're minimizing your profit as well as the loss.
Makes sense.
Right? If you're specifically you're buying a longer call, right? So when you're buying a longer call, that means like rather than paying like $300, you'll be paying $100. For $100, if you're getting $500, that's your good returns. Rather than getting everything as a one, and you might lose $300.
Makes sense.
You might be able to buy a couple of more extra stocks, right? Or options.
Makes sense.
Okay. So now let's see how does this work on the golden cross, or worked on the here on the Apple. See, Apple give the golden crossover here, and the golden crossover was kind of, you can get out, and then again the golden crossover for the coming down, right? So one, and then the second entry, and then you would have got the third entry if you want to, because this is the golden crossover. Remember, if it's golden crossover, you are getting in, right? That way, and keep the stop loss. If it hits, if you hit the 2 stop loss in a day, you are done for the day.
Right.
Right? That will be your if that's for the day traders. Okay. Now let's go for the Fibonacci. Anybody has any question so far for this golden crossover or no?
One more question, Jigar. So
Yeah.
this golden crossover and MACD is similar, right?
I don't follow MACD, because if I say MACD is gonna give the late signal. Let's see whether it gives the good signals or the late signal. Okay.
And this another question to add on this is, the golden crossover is only for those specific numbers. You said 4,
9, 18.
9 and 18, right?
Yeah,
4?
you can use the 5, 10, 20. Okay, people do use it, but so far this works better. So now this is MACD, right? So if you see in MACD here, it gives you the selling signal, but the price went up. Whereas the EMA told you that, okay, I'm still supporting you. At the same time, I don't have the Bollinger Band. Let me put the Bollinger Band here again. And at the same time, Bollinger Band 20 EMA was supporting you as well, right? But what did the MACD do? MACD was down where the price was up. So whom you gonna trust? If you're short here, you will lose the money. Does it make sense? Why I don't use MACD?
Yeah, it's clear. And everything that you discussed is what we call price action, right? I mean,
I'm just what I'm talking is about all about the price action.
Okay.
Right? I don't talk anything about because price is the one which is the God. Everything MACD comes up or the EMA comes up, everything comes from the price. Even the volume, when you have the higher volume or something like people are buying, the price is gonna go up, right? So it's already detected here on the price, is already discounted. If the price is falling, not many buyers, it's gonna fall. Simple, right? Let's see the MACD. See here, MACD gave the signal for a sell and the price went up, right? Let's see the MACD. Let me just close this off and just do the back testing for the MACD, right? Just for the sake of improving and you're like a more of a idea how does the price work, right? And if you see here, MACD asks you to buy here, right? And then when they give the signal, see here, it gives the signals here and it gives you the signal here. Okay, but if you see the price is falling and they give another signal here that I am going falling down, but your EMA and the price actions were down. If you go for the higher EMA, which is like 20 EMA, let me put it down on the 20 EMA, higher EMA, the higher EMA was kind of going down. It wasn't changing much, right? You will see there's a cluster. That means some confusion. The picture is not clear yet. And then you take the trade accordingly. Don't trade according to the MACD. I don't follow the MACD. You like kind of learn. When you learn everything, you just MACD and all those indicators. I don't follow more indicators anymore. Just couple of indicators and all price action. Does it make sense why I don't follow it?
Yep, got it.
Right. So, and this is, even you don't have to follow this one, but this gives you an idea. We are not following the EMA, but this gives you an idea that, okay, you are in the right trade, right? Say here, our price action was saying it, when you have the like a big wick, wait for the candles to close it. What was the low of the day here? you get out here. At the same time, the golden crossover is telling you that you are on the right track. Bollinger Band is also telling you that you are in the right track. Now you don't know what will be the target. That's why you have this extra support, which will help you. Okay, this will your target, so you can get out here. Okay, so from here to here, you get 1%, and for the day trading, 1% is pretty good, right?
Jigar bhai, one question for this Bollinger Band and CPR. Are these used only for day trading, or we can use it for like swing trade and longer term trades?
You can. So let's say the day. Okay, let's say the day. I'm gonna turn off this. Okay. If you are a swing trader, right? This is the 20 EMA. Whenever you get the 20 EMA, the price will react. Either it will go up or down. This will act as a support. When you see the Bollinger Band going, like the price is going along the Bollinger Band, you can either be short or the long. If you're a long-term investor, okay, long-term investor, you don't want to get out until the price breaks the 20 EMA, 20 moving average for the Bollinger Band. You want to be with them, be with the price. Once it break it, you get out, and you only buy it at the 20 SMA, like 20 EMA. And if you see on the weekly chart, the monthlies are more stronger. So whenever you see the 20 monthly, get that into the trade for the longer term, very long. Okay, very long, for about like 2 years or 3 years. Monthly 20 SMA is the best to get into the trade for the long term. Any trade.
So you buy when the price goes above the 20 average?
Yeah, you don't buy here because this is the like what do you call, like a high price, right? Say this one for the like a long-term investor, you get in here, right, and get out here because the price closed below, like here somewhere. So what was the target here? You would have made 36%. How many days? 1st February till the first in 2 years. Now we are in the good market, right? If you get in here somewhere here, you are still in the market. You are not getting out because the price did not close it below the 20 SMA. One time the price will gonna come close below 20 SMA, and now you move your trailing stop loss here for like a longer, or if you wanna get, this is your like target. So if you achieve your target, you get out. If not, then trail your stop loss for the longer term. Okay, I'm not talking about the swing trading or the day trading. I'm talking about the swing trading, like a long-term trading.
Yeah. So when you say trailing stop loss, it means that when the stop loss price will hit, it won't sell it. It will wait a little bit longer.
So trailing stop loss means, like, say for an example, when you get in the price, this will be your stop loss regardless, right? Then on the next day, when the price went up here, you put your stop loss here. So even the price, if the price falls for any reason, you will be able to make some money.
Oh, so the stop loss will keep moving upward if the price is moving upward.
Yeah, as the price moves up, you keep your stop loss higher. So that means you will be confirmed that you are assured that at least you're gonna get 50% or the 60%, even the price falls from the top.
Got it.
Right? The minimum
it will be automatically moved upward, correct?
No, yeah, you can move it upwards automatically. Okay.
Got it.
Any question or concern so far? I hope everybody's getting, because only few people are talking and other people are not talking. So I'm not sure how it's going with the others. Please ask the questions. If you don't ask it, you're not gonna learn it. Anybody? No? Okay. Wow. Everybody's
Jigar, just a request at the end, when if we have time, if you can quickly recap, like for example, I'm not a day trader, but I do the swing trade and the long-term trade. So for like for the parameters to set for CPR and for Bollinger Bands. If you can just, at the time of wrap up, if you have some time, maybe you can just let us know what should be our parameters to look.
So if you want to take the pictures, let me go give you the picture. Okay.
Yeah.
Take the picture of CPR.
For swing and long term, correct?
Yeah. See, CPR is like more of a day traders use it, but you can use it for a longer term. Let me say here. On the, it won't gonna give you like a much idea on a day trade, like a longer term. It will just have to use the like a monthly CPR and the weekly CPR.
Right.
But I would prefer you to give more weightage on the moving average for the long trader, like long-term trader. Okay.
So using the moving weighted average, you said that should be like 200 or
yeah,
50.
Those are 200 or 100, those kind of levels. But if you wanna do the day trading, you can take the pictures of this one, like daily pivot, monthly pivot, weekly pivot, days high, days low, and the style will be like daily pivot, bottom CPR, upper like top CPR, R1, R2, R3, S1, S2, S3, S4, weekly pivot, and the monthly pivot. But for the it's not gonna give you the good pictures when you're doing the like a day trading, like a long swing traders, because this is like a so messy, right? So I would prefer moving averages and the Bollinger Band for the long-term investor.
Got it. Thank you.
But the stop loss is the must. Okay.
Yeah. Got it. Thank you.
Okay. Anybody had any questions? So we can do the Fibonacci and then kind of wrap up the session because we are almost kind of close to the time.
So all these options, are they available in TradingView paid version or?
This is free. I'm using free. Everything I'm using is free.
Okay, so when I subscribe, it's at first 30 days that there will be trial. So I was not sure.
Yeah, you can do the usually wait for the that what you call the Black Friday sale. You will get 50% discount.
Okay, all right.
But 3 is enough. The only thing is like you have to kind of move couple of times the indicators and that's it. If I want the plant more than 3, I have to move someone out. But I'm not using more than 5 anyways.
Okay, sounds good.
Right? Right? Any questions so far?
Hi, Jigar, we gonna touch RSI as well, or just Fibonacci is the last?
Like I can touch the RSI.
Okay, that would be great. Thanks.
Yeah, RSI, I don't use it much, but RSI you use it for just for the confirmation. Okay, this is related. What is RSI? RSI is nothing but it's showing the momentum or the strength of the particular trend. Okay, people say like if it's more than 70 or more is overbought, more than 30, less than 30 is oversold. Nothing like that. On the general view, you can say that thing, but usually each stock has a different RSI, different momentum, right? Not all the stocks are like same as the RSI. If you see, this is an Apple, right? If I see this RSI on the monthly basis, this is on a monthly basis, okay? Always look RSI on the monthly basis. Do you see that the RSI is coming down than less than 45? It came only once, like, but is it taking a support? And most of the time, it's staying above the 60. Does it make sense?
Yeah.
Right? That's monthly. Okay.
Okay.
So that means like, is it overbought? No. That means the stock is still has a power to move upwards. Right? On now I turn it to the daily. If I go to the daily, if you see here, it's facing a resistance at the same level. Right? If I want to move this RSI with the price action, because I am more focusing on the price action. So now let's see. I'm gonna move this one off too. There is a called a divergence. What is the divergence means? Is like a price is moving down, but the RSI, the momentum is going up. Okay. So for an example, okay, here. This is the good divergence. Okay, if you want to find out, this is the good divergence. The price is moving down. Okay, but the RSI value is going up. What does it mean is the price is gonna go up next time, most of the time. Does it make sense?
Yeah, perfect.
Okay,
Okay.
so this is how you use the RSI. Or if you want to use the RSI, you can use, put like this small line here. Okay, so this is your support and the level for the momentum. So if you see the price goes up, and this is like resistance. Okay, let's put the resistance as well, right? This is your resistance for the RSI here. Okay, so now if you see here, most of the time when the price for the Apple is touching at around 40, it goes up. Okay, can I say this one, like touching 40?
Yeah.
It's moving up.
Okay.
When it comes to the 760, 80, price reacts and the momentum falls down. Momentum is falling down, right? And at the same time, this will be your another support. So price falls, comes here, and then the momentum comes and again goes again. If that falls, then the deep, if the price falls below the 50, you can expect the 40 to come.
Okay.
Does it make sense how you can use the RSI? The momentum is
Exactly.
falling, rather than following, oh, is 80 is overbought, is 30 is oversold. Use the RSI this way.
Yeah, basically it tells you indication regarding momentum,
Yes,
right?
that's
Yeah,
the
okay.
relative strength index.
Mhm.
Relative to the price, what is the strength of the momentum?
Okay, got it. Perfect. Thanks.
Okay, so this is RSI. I don't want to teach more RSI, because if I teach it and then people follow those overbought and oversold criteria, they're gonna lose the money. Even for the 15 minutes, okay, for the day traders, okay, because we are doing it for RSI, you can use this RSI too. And if you see here, it did kind of support, right? It is supporting, or even for the 15 minutes chart. Once the fall, like see here, price went up to the 60, 70 and it reacted. Always price try to readjust themselves to go again, and then it fell. Once it broke the 50, 40 came, and then it came the 30, and then it took the support again to go up. And for here, if you see RSI, you need to spot the what you call the divergence. If you are like doing day traders, what is divergence? The momentum, the price is going down, right? But the momentum RSI going up. This is called divergence. Otherwise, sometimes what happens? RSI is going down, but the price is going up. So this is called divergence. That means like something gonna happen. The price gonna do some correction. So let's see. I think Tesla has pretty good RSI. Divergence. I found it last time on our other group. Okay. Okay. So here, this is not here as well. Because our divergence is very hard to find, right? Sometimes the price is falling. Okay, here probably. See, the price is falling, but the momentum is going up, right? Can you see? Everybody can see it. The price is
Yeah.
falling. The price is falling, like the low for those price is falling, but the momentum is high. So that means that you can see there is a change gonna come from here, and from here the price went up to 2%. Okay, now let's see others for the price. Price is falling down. No, there is no divergence, and it takes a time to find the divergence, because like I'm not keeping the example which is better for you. I'm just kind of going through the all those prices and kind of find the example. That why sometimes it takes time to look for the, because it's not happen every time. Divergence doesn't happen every time. So this is, you can call a divergence as well. Okay, The price is going up. Oh, no, sorry. The price is going up here as well. So yeah, sorry, that wasn't divergence. So no, I couldn't find the bearish divergence. I'm trying to look for the bearish divergence. Bearish. Bullish divergence is like a more stronger than the bearish divergence. Just to kind of give you an idea.
Yeah.
Okay, so let's move on to the Fibonacci. Okay, because that's also an important. So Fibonacci is nothing but going for the day high to the day trade. Swing high to the swing low. So for an example, on a day trade, what is the last swing low? You can do the way you want it, place it, but usually what the way I do it is like I'll go to the low, which was this one. If you go here, go for the Fib retracement, and when you click out here, this is the low. I can use this low as well, and go to the high, low to the high, and just adjust this one a little bit. And whenever you see this area 23, 38.5, 0.68 or 78, that will work as your good support or the resistance level. Okay, say for an example, you can assume, once the price broke the 23 level, you will get the 38 level and the 50 level. 50, 60 and 38 are a pretty good strong level. Okay, they are very good strong level. Usually the price reverse from that level, usually, not all the time. Okay, always go from the swing low to the swing high. And how we can use it on a day trading, because that's how we want to use it properly. Okay, day trading. Okay, so what was the swing low? Swing low is this one. Okay, everybody agrees? And the swing high was here. So now, if you see here, did 0.78 provided you the support? When you are like doing it, once if you don't have the price like this area, if you don't have this one, at least you can draw it like up to here, right? Draw it, and you can see the next stop is like my support line is here. This is my support line as of now, because this is the high for till now. This is my another support line, and this is my another support, and this will be my another support. Okay, can I say these things like according to the CPR or according to Fibonacci level?
Yeah.
Okay, now if let me put CPR here as well, right? Just to kind of see how CPR worked at the same time, because it's all about confirmation. Do you see this line was also given by the CPR? Like if you don't see that line, let me draw that line as a black one. Do you see this line? It was a level for the CPR as well. It was a level for the 78.786 level for the Fibonacci as well. And if you see the 0.38 acted as a resistance for the whole day earlier. Does it make sense so far or no? If it makes sense, let me know. If not, I can explain in a different way.
Jigar, it made sense, but you took from the low to the high, right?
Yeah.
How do you define that time frame that you selected?
This is for the 5 days, 5 minutes chart, right? This is the 5 minute chart. Let me go for the higher time frame. Okay. Let me go to the higher time frame, because you are looking for the resistance and support. So what is the high of this area? Can I say this is the high?
Yeah.
And can I say this is the low? Can I?
Yes.
Okay. Yeah. But before this, before we knew it, before we know about this part, we had only this part. from here to here, right?
Mhm.
So now let's see how this price worked according to the Fibonacci if it drove from 1 hour time frame from here to here. Okay, let's see the Fibonacci. Okay, now what I'm gonna do, I'm gonna do the levels like here, because I don't know, I haven't checked the CPR yet. Okay, so I'm just drawing the line. This is all price action. Okay, okay, now I'm gonna take this brush off. Okay, now let's go for the smaller time frame. Okay, do you see most of the time price took the support somewhere or acted as a resistance? Because this, we came from the bigger time frame to the smaller time frame, so the Fibonacci won't be accurate at the time. But if you see here, if you see here, the price took this like resistance on the bigger time frame. Okay, this will act, this did act as a resistance, and this one act as a resistance as well, and the provided the support here, then price moved up, took the resistance here, then took the support, tried to go, again went up, took the resistance, and then it fell, right? So Fibonacci, you can use it differently. If you are just doing for the like a day trading, use it for the 5 minutes. If you are doing for the longer time frame, like a what you call, say, date, like a swing trading, let me see, look for the swing high and the swing low. This is the swing high, this is the swing low. So if I want to predict the price for tomorrow, okay, so this is the better area where it's taking a support. So now I know for next week, like 635 for the Tesla will be my good support area. Does it make sense here? Let me make it more perfect here. Here is the higher. So this
Why not 600?
630. First, what comes first?
Okay.
630. 630 will be your first support. Second support will be 591. And the third will be again 540. Okay. At the same time, you just don't focus on the Fibonacci. At the same time, you draw the trend line and you know, okay, this will be act as my support as well. So now, if I want to do the trading next week, I want to make sure the price goes below 655 and close below 650, and then it will go to the 630, and then the price might, let now look to this, because you are predicting for the next week, 612 and the 689. So this will be your level, right? Because you are going for the smaller time frame. And at the same time, again, you don't just focus on the one side. This is your higher time frame. And if you see the movement, the way the Tesla is moving is going up, taking a support, it might break out here. So at the time, this will be your first target, and this will be your second target. You know what I mean? Like how you determine the price. You don't have to just focus on a one side. Always
Okay,
look on the both sides. What they're trying to tell you, what the Fibonacci is telling you, what the trend line is telling you, what the price action is telling you, and sometimes what the news is telling you. Sometimes the news comes tomorrow, Musk was kind of put behind the bar for some fraud. You never know what's going to happen, right?
awesome. Yeah, thanks.
Right? Anybody has any idea or concerns or couldn't understand what was trying to get?
No, that's fine. I know quite a few successful traders. For them, actually, the first half an hour. So, for example, 9:30 the market starts. So by 10 o'clock, they're done for the day.
No.
and most of the time they make good money. So if we target something like this, then in first 30 minutes we should be just doing something. That what is the most useful tool or indicator here, just for a very short term?
CPR.
CPR. Okay.
CPR is the most important tool for the day traders. Whenever you see the price going up, closing above the CPR, second candle breaks it. Once you get the confirmation, you go long, take the first target, you are out in half an hour.
Okay. Sounds
Either
good.
up or down. Either up or down.
Mm-hmm.
See here. Broke the CPR, you took the 1%, you get out. When it went like a come up, took the like resistance in like a first 20 minutes, took the 1%, get out. Because you know this is the price action, took the support, get out. If you want to get in again, go in, like look at the 5-minute chart. Okay, here as well. Resistance broken, give the closing below it. This is just like go down 1%, you are out. Simple price action.
Yeah, right.
You need to see the closing. There are like different techniques. Like again, here again, there's like also like a 3 hours, like a what you call for just for the day trading. It takes like 3 hours to understand all those patterns, right? But in the mota moti, if I say, look at the first candle, where it gives closing, where it going down, where it closing, whether it's closing below the CPR, closing below the support or the resistance area. Go short, put the stop loss, and within 1% you are out. Within like half an hour. Okay.
Yeah,
Anywhere,
right.
anywhere. If you see here, even here, first candle broke it down. The first, this one is your support. Here, try to draw the Fibonacci. Try to do the Fibonacci 50%. Sometime what happens, the price comes here. Like say for an example, here, the one which I wanted to say earlier. So Fibonacci, if you draw here Fibonacci, this was the swing low. How high it can go? It will give you an idea with the Fibonacci that this is the resistance. Do you see? It came from 78. Do you see here? Because you don't know this price. At the time when you're market, you only know this price. You don't know what is happening. But
Yeah.
when you have the Fibonacci, you know the swing low. This was the swing low and the price is moving up. So till 10 o'clock or 10, 10, 10, 10, this is your swing like a lowest for the day. You do the Fibonacci. Now you know the level. Once it breaks that level, that you can see, yeah, I can still be in the trade, or I can go short here. Once this broke the day like a day low, because at the time 11 o'clock, this was the day low, and the day low was broken, you can go short. And if you see, so for the entire day low wasn't broken again, right? This was the day low, it wasn't broken. Does it make sense here?
Yeah, totally. Thank you.
So it's not only one tool. Price action is not about one tool, just about the candlestick. It's about the like all the different patterns or the different indicators which you are using and how you use it. That's why you do the day trading, right? People just use the MACD, and we have seen MACD gives the false signals, but the price doesn't lie, right? Price doesn't lie. If it's lie, then we are like cut the stop loss hit. And always
So,
breakout.
mhm,
Breakout has to be bigger candle, not with the smaller candle.
right. So these indicators, do they show for pre-market after hours as well?
Yeah, you can use it.
Okay, right. So because at 9:30, when you decide that okay, I'm going to, uh, trade X script, X ticker, then you might have already done some homework.
This is
Uh,
this is homework for the yesterday.
right.
Everything from here, you have to come from here. So for an example, now if I don't know this chart, okay, what I'll do? This was my like a turning point because price took the support and then break out and then took the support. This is my turning point.
Okay.
And this is my turning point as well because it took the support. Now let's look what happened. And what was the high? This was the high for the day. This was the low for the day. Okay. If I don't know anything, okay, I don't know anything what happened on the next day. Now, do you see the price almost reacted at the same way?
Yeah. Right.
Once you know this was your turning point, was broken, you get in, and at least you get 1%. At least 1%. But if you see this is your like a big support area, and if this was broken, if you miss this entry, you can still use this entry. At the same time, you use the Fib, and you get it here, and you get 1% here as well. This was the 1% gap. You can get the 1%.
Right.
And the
Yeah.
second
Makes
entry will
sense.
be here if you want to. If you don't want to, you don't need to. It's all about how you use the chart and draw the support and resistance for the previous day for the day traders.
It's very interesting to see the Fibonacci almost supporting
Yeah.
the support levels.
And
Is there any significance for the scholars?
column is kind of the numbers are the Fibonacci numbers like is all around the world. So how the Fibonacci comes? 1 plus 2 is equal to 3, right? So 2 plus 3 is 5. 5 plus 3 is 8. 8 plus 5, 13. 13 plus 8, 21. That's the Fibonacci number. Okay, that's all over the place, like everywhere. If you see the like some flowers has the like 5 leaf, sometimes they have the like 8 leaves. That's what the Fibonacci is all around. That's what they're saying, and that's how they come up with the number. And it is used very well in the market. And if you see this Fibonacci here, like okay, we have to wrap it up in like 5 more minutes, but just for an example, this was the high, right, at the time. Like this was the high, right, at the time. So now let's see if we draw the Fibonacci. If you see, it exactly supported at the 0.23 level. That means the market is very bullish. It's gonna go up. If the price is not coming even to the 50% and it's taking a support from 0.23, that means the price is very bullish. It's not gonna come down very soon. And even here, if you see, now this is your high for the day. And if you see here, it took the support first, and usually it kind of range bound at the area. Okay, now let's look for the pretty quick for this another session. Okay, like this area, this Fibonacci. Okay, sorry, I kind of, there is a Fibonacci extension and Fibonacci retracement. The both kind of different. So I need to use the Fib extension, but let me use the Fib extension if I can pretty quick. Trend based Fib extension. Okay, trend based Fib extension. Trend based extension. Okay, I'm gonna cancel this thing. So the trend is here. So this was the trend, right? This one is kind of, I usually don't use the Fib extension. I usually use the Fib retracement all the time. So this was the trend. You can see the trend was like this was the low, this was the high, and it couldn't sustain the 50%. So the price gonna go fall down. Okay, let me see the normal one. Let's see the normal one. Yeah, the price tried to went up, but it couldn't sustain even the 61%, and then it fell. So usually it gives you like big idea that the price is on a downtrend or the uptrend. At the same time, if you see here, the first candle was very bullish, but the once it broken, it provided at the support, and then it fell. And once the 50% was broken with the big candle, that means you can say, yeah, the price is kind of still on the downtrend. So use it, ask the questions in the group, and we'll see how it comes. Share your chart. Whatever you draw, share your chart, and then let people make some comment. Okay, does it make sense to everybody?
Sounds good.
Right? Because it's not gonna be like, if you don't practice, you're not gonna get it, trust me. Right?
Okay. Yeah.
Okay, but any questions so far?
Jigar bhai, a question from the day trading perspective. Really quickly, so how do you select scripts to day trade? I mean, like, do you do the research based on the last day's performance, or you
Usually,
randomly select it and
yeah,
start day trading?
usually, like what I do now, I have some script,
Mhm.
like the big one, and usually you check the charts for that one.
Mhm.
If you think that this is gonna break out or break in, like a either side, you take a trade. Otherwise, you don't take a trade. So,
Okay, so you have a list that you normally look at, and
like usually now, I usually follow SPY most. Like just follow the SPY, because it's all about making the money. Whether you want to use a Tesla or whether you want to use SPY.
Mhm.
Just follow 5 script. Like say, make any 15 script you like the blue chip. Okay, 15. Just follow that script, and you will get at least 2 script to day trade every day.
Got it.
You don't have to look for like a flash, momentum stocks and other stuff. You don't have to. You can ignore those noise, because sometimes pump and dump doesn't work.
Yeah. Makes
Right?
sense.
Or if you are pump and dump, get in, get out, and don't regret.
Mhm.
Does it make sense? Because like this is like my Indian here market, right? And I follow more on Indian market. So I have the script. I just follow those things, and like, say for example, I say like, this is like a sales idea, like sell idea. This is like a, so I go this the idea, and I say, okay, what's going on in the day? So now if I see, okay, there was a breakdown. If you see here, this is the breakdown. Now if you want to go long, you can go it now. If you don't want to go long, don't go it. Right? This is like ICICI Bank. See, channel was broken. If you follow this trend, right, you might be able to get good swing trade. Right? Trend. So now your target will be 673. So you don't want to go short on those trade. Right? Once you break it down, you want to go long. So make like 15, 20, 100 stocks, and look at those chart every day, and then you'll be very easy for you to understand which way the market is going.
Yeah, makes sense.
Rather than like going all around and like looking into the group what to buy, what not to buy. Just follow
because there
your
are like
script.
hundreds and hundreds of stocks, right? You cannot look at every stock.
Yeah, you cannot follow everything.
Yeah.
If you are like a just momentum trader, then it's a different story. Okay. Anybody has any questions so far?
Thank you, Jigar bhai.
Thank you very much, Jigar bhai.
Jigar bhai, I have a question.
Yeah, go ahead.
So would you suggest any screener where we can figure out, what are the 50 securities or scripts that we have to finalize, and
Okay.
we have to keep a check on it?
Okay. So if you go to the screener here, stock screener, there are different kind of screener here. Okay. Play about with the kernel. Say like, say for an example, last time when we are doing it, we found AGXN. Okay. So it was a nice ticker. Like say, it was an unusual volume, AGXN. I put the call for the in the group as well. AGXN. Oh, AGXN or AXGN. Okay, AXGN. Right. I don't know what this company do. Right. When I found the chart, because for me chart is more important than the fundamental, because you don't want to keep it longer anyways.
Yeah.
Right. When I found this company, right, and I'm gonna move everything out. Do you see this pattern here somewhere? Anybody can recognize? It goes down, and then it breaks out, then again it goes down, right? Do you see kind of pattern?
Yeah.
And what happened is here was, it gave the breakout. So I put the call here because I'll notice last Thursday or Thursday, and then I go to call for this one. So the target for this one is 20. Once it goes to 28, it's gonna go double in 6 months, because on the longer time frame, if you see this area, if this stock is not a recommendation to buy, but you can keep an eye. If the price goes above $24, you will see the price reaching $38 and $45, because on a monthly basis, it's making a good bullish pattern. So it has to break this line. Once it breaks the line, it will go bullish.
Okay. So, Jigar bhai, I mean to say that, for example, if I have to select 50 scripts that I have to keep on a watch list, right? So what's the best way to do that? Should we go and look at the screeners and figure out like, these are the ones that I have to, keep it in my watch list?
Okay. Go to the SP 500. Take first 100 companies.
Okay.
Make it easier.
Okay.
Right? And then you can go down right here and say we take off the like ETF, depository receipt, common stock, you have it. And then you can play about with the so many things. Say you want the price above, say for an example, crosses 100 moving average. Now you have only 5 or 6 coming in. Look for the stock quarter, let's say VWTR, V water. Okay, I don't know what this VW water. I'm just looking at the chart. And then you look for the chart. What does the chart on the daily says? First, check it out. What's the trend? Okay. So now if you see, this is on a consolidation phase, right? And the price is coming down. So this is like not a good stock as of now, but let's see what the monthly says. Even for the monthly, the trend is downwards. Okay. This is your like support area. So you don't want to take a trade just now. You just need to wait it. So W water, even though it's a strong sell, strong buy, you don't want to buy it. Let's say TRHC. Okay. I have only 5 more minutes, guys. Okay, because after that one we have to go for the second class. Sorry. So TRHC. Look for the trend. On a daily, it's kind of also like a downwards. It's making lower highs, lower lows. So, and it's making consolidation, right? It's consolidation. So if you want to keep an eye, if it breaks upwards, take the target of like $53. For the bottom, take the target of $33. So that's how you keep a track. Put the alert on the VBull. Once it crosses the whatever the $49, you'll get the target, because this is like a good area. And then you look for every day.
For screener,
yeah.
And for screener, you will suggest VBull, right?
No, you can use TradingView. TradingView is the better screener. For the alert, use the VBull.
Okay.
Because you don't pay. Here you can only put one alert.
So Jigar, I know we are over. Just quick question. So normally, what do you put in the screener to identify a stock?
I play about. Trust me, I play about every time. So I prefer moving average. Say outperforming S50. Okay. Let's see this one. I'm gonna go to the strong buy. Always look for the strong buy, right? Because they are saying so there is something there. But don't buy it because it's saying the strong buy.
Got it.
Just go, okay, this is, and you don't want acquisition corporation, right? You don't want the A Corp. You want the TMSI. Let's see, this is, I don't know. Trees Corporation. I heard the name first time. Never bother. Go to the day trading. Look at the chart. And this is the new company. This is very new company, right? So you don't have any data, but what you can do is you can put, say, this is the kind of range. So with a strong stop loss, like about $27, if you want to go long, you can go long. but you don't have to buy all the stocks, whatever the stockers are giving. Let's see anybody which we can kind of swim. Let it swim. Length and go. Look, this is also a new company, right? But they are putting a strong recommendation. So we don't want to buy those company like a Rain. This is also a new company. See, so what is just doing it? You don't want to buy it because they are saying, because of the after the 50% of this, as this one, it will fall back again. Here, it will fall because the retracement will come up to the 50% most of the time. So if you go $19 something, it will fall again if it has to fall. Otherwise, it will sustain and go to the $24. But why you want to take a chance? There are 100 of tickers in the market. Why you just want to stick with the one or two? Just look it. Whatever you like it, just take it. If you don't like it, if you don't have a confidence, don't go get in.
Okay, and where do you filter S&P 500 and in this?
Just I haven't filtered anything. I will just kind of check the screener. Right? For me, I usually like go with the different companies. Whatever is like a blue chip, like a Baba, Netflix, everything. And I keep a track on those charts. And I usually do the SPY now again. And people like PLTR or Neo, those companies, you can keep it on eye. If you keep like 50 companies, it's more than enough. It's more than enough for you to do the day trading.
And we have to Google, like, figuring out like how many companies are there and which are the companies which are part of S&P 500.
Yeah,
right?
you have to go and again like do all those things, right? That's you have to do. Okay. Anyway, guys, sorry I have to let you go because like in 7 minutes I have to start with the another session. So I have to send them a link as well and everything. So if you have any question or concern, please ask in the group. And I'll be happy to answer your questions. And good luck for your trading because it's very intense. Work on your risk management, work on your psychology, and it should be good. Okay.
Okay. Thank you, Jigar bhai. Thank you so much.
Thank you, Jigar bhai.
Everyone,
you
have
so
a great day.
It was very helpful.
Bye.
I hope somebody will share the video, right?
Yeah, we will share the video. I will share the link.
Yeah, kindly upload it at YouTube as well.
Yeah, I
thanks.
did upload. Yeah, thank you.
Okay, thank you.
Bye-bye.
Thank you.